money matters, the JSE All Share index is down for a third day, trading at a near 3-week low. The rand has rebounded in midday trade after starting the day flat. On the domestic front, the latest data shows South Africa's inflation rate eased more than expected to a 13-month low, giving the country hope that the Reserve Bank may be kinder in the next rate decision. We can only but hope. Viv Govender is the portfolio manager at Rand Swiss, and he joins us now for the latest market moves. Viv, always good to see you. Thank you very much for your time this afternoon. So the rand started trade flat this morning at around 18.43 to the dollar. What's driving the moves there?
Yeah, look, I mean, we've gotten a lot stronger over the last week or so. But just back to where we were basically before that announcement by the U.S. ambassador that we were selling arms or aiding Russia with armaments, etc. We were about 1830, 1820, 1840, around that range. And then we went to about 1991. And so we've come back to basically where we were before that news. What else has changed in that meantime? Look, load shedding is still around, though much better than it was. But, we don't have a long enough trend line to say this is over. We've had some reasonably good news around inflation, but that might be negative for the rand because, as you said, it's going to make the chance of a rate hike go down a little bit, and higher interest rates generally tend to be positive for the currency. And then finally, I think we had some good news around the current account as well coming out. So the rand probably should be a little stronger than here, but it needs to break through that 18 level before we can see significant moves stronger. Okay,
you touched on inflation, and headline consumer inflation cooled for a second consecutive month in May to 6.3%. And you mentioned that load shedding, albeit unstable, but it's better. So what does this say, especially when it comes to future interest rate decisions?
Yeah, look, I mean, 6.3%, still upper end above the target, down from 6.8 the previous period. We are seeing, food prices come down and petrol prices not come down, but the rate of increase is slowing down. So food inflation is at about 11.8%, down from 13.9%. But you must understand, I mean, this isn't like disinflation. It's not like the price of food is coming down, it's just that the rate of increase is slowing down. So food prices are still almost 12% more expensive now than they were a year ago at the same time. And like I keep saying, it's like, who do you know that has a 12% wage increase in the last year?
Exactly.
Very few people. And therefore, for people that really spend a large chunk of the income on food, which is the poorer people in the country, if you spend 25-30% of your money on food, it goes up 12%. That's a huge chunk of your disposable income going in. If you spend 5-10%, it's not such a big deal. So 11-12% increase in food prices is still a problem. We are seeing oil prices come down. We'll talk about it in a second. But that might be going away because oil prices seem to have found a bottom right now, about a $75 per barrel level for oil. And that might be bouncing up because OPEC definitely wants to go higher.
We'll get into the oil prices in a moment, but I want to touch on what you mentioned in terms of food prices. Is it time to take a look at the regulation thereof, especially when you take a look at the fact that people spend most of their money on food?
Yeah, look, I mean, there has been some moves around price controls internationally. So places like Europe have really pushed it forward. To a certain extent, the US has done it with oil. It's more difficult when you have like so many diversified producers, retailers, etc., of food to basically get prices under control in that manner. You know what I mean? All prices, few buyers, few sellers, like refineries and so on. You could do certain things around that. But when it comes to like food, how many farms are there? How do you price, like for instance, the vegetables, etc.? How do you price, oil, different brands, etc., etc.? And then the retailer markup, etc. So we're talking about many different things to be done here. I think the easiest way to do this probably would be to increase the social grant by a certain amount to compensate for the food price increase. And people say, okay, the social grant is unaffordable, etc. But I mean, we are talking about food for probably children. It's an essential. Yeah. And if there's anything that's worth interfering in as a government, that's probably the sector you want to be doing it. I think the easiest way to do it would probably be the social grant, rather than trying to manipulate a very complicated industry, makeup.
Okay, fair enough. Oil prices rebounded earlier today, like you mentioned, recovering after 2 straight sessions of losses. What's driving sentiment, and what does it tell us about fuel prices in the near term?
Yeah, look, I mean, oil prices have found a bit of a bottom here. If it gets to about, say about a couple of dollars below where we are right now, it kind of bounces up again. And I think that is a pattern we've seen a couple of times this month, and even before that. Oil prices have come down quite significantly, from about over $120 a barrel to about $75, $74 a barrel at the moment. OPEC doesn't want this price at this level. It wants a few dollars higher than here. And has taken moves to make that happen. At the same time, we've also seen China return. China is not doing as much as people had hoped. I mean, the market was disappointed with the rate cut that they had come recently, but they are definitely taking moves to basically try and increase the speed on the growth rate in that economy, and that's going to be very positive for oil prices. So I think that what we see oil prices at the moment might be a temporary relief, and that's what I fear for inflation, because a lot of the things driving inflation lower has been the drop in oil prices over the last little while. If they should start increasing again, they don't get back to 120, but maybe 90, 100 or so, which is possible, especially if there's some kind of shock coming through, we would see inflation come back roaring.
Imagine not being able to pay funeral and retirement benefits. The Southern African Clothing and Textile Workers Union has demanded that Sekunjalo Independent Media repays a 2013 loan, now worth around 300 million rand. What's the latest?
Yeah, look, I mean, Sekunjalo has been wrapped in scandal, and it remains to be seen, will they be able to repay this loan or not? A case like this here, where obviously this was some kind of political investment decision. I mean, why would a union just go and take such an incredibly concentrated risk on a particularly small, company? I mean, it's not a small company like, from our point of view, we're talking like, hundreds of millions of rands, etc. But in terms of like the global economy, we're talking about trillion-dollar companies out there, and we're taking such a concentrated risk on a small South African company. It never made sense, especially for a loan. So yeah, it is troublesome from that point of view for the union members. But like I said, I mean, Sekunjalo has been wrapped with, this scandal, and it remains to be seen whether or not they'll be able to do this and what the timeline might be. But I have to say that from the union's point of view, union members have to look really closely at leadership when we made the loan in the first place.
So National Treasury is one step away from taking over a portion of Eskom's 422 billion rand debt. President Cyril Ramaphosa will now have to sign the Eskom debt relief bill. Your interpretation?
Yeah, look, I mean, this was pretty much like, in a way, it's almost like just a paper kind of thing, because quite frankly, the government effectively was backstopping Eskom. No one doubted that Eskom was not going to go bankrupt, and whatever government coming in and helping them out. It just would have to have happened, because if Eskom had gone bankrupt, they hadn't been able to pay suppliers, hadn't been able to pay schools for equipment, etc. I mean, the government obviously would have to step in. You know what I mean? So this was kind of one way of kind of almost formalizing what was going to be an unofficial kind of agreement anyway. But it also does probably decrease the cost of borrowing from Eskom, because now they have the official backing of the government, and that makes the debt a little cheaper probably. Government debt should be the cheapest debt in any country because it's the lowest risk thing, because everything else stacks on top of government. Everything it has to be higher risk than government because it's basically the foundation of the economy. So from that point of view, it's good. That being said, we need to see some kind of actual, change in Eskom in terms of efficiency, in terms of management, in terms of, just operating ability. Because yes, we are in a period of low lurching at the moment, but it's not going to last if last year, the year before, any syndication.
Oh my. Viv, thank you very much for your time this afternoon. But for your manager at Rand Swiss, Viv Govender.